decentralization only matters insofar as it promotes permissionlessness and self-custody. So it's a tool. It's not the end in itself. The end is permissionlessness.
Hey everyone, welcome to the Smart Economy Podcast, where we ask your favorite builders the questions you wish you could ask them yourself. This is a production of neonewstoday.com, and I'm your host, Dylan Grabowski. In this episode, we're joined by Aaluxx Myth, the co-founder of Maya Protocol, a decentralized liquidity provider for L1 to L1 swapping, and he's the author of Prop 6, which helped resolve the issues associated with the meltdown of THORChain that happened earlier this year. In this conversation, we discussed building as a pseudonymous founder, how permissionless systems are used as a tool, the role of the Cacao token in the Maya ecosystem, how Cacao's token model served as a solution for the TCY token that was distributed following the collapse of THORChain, lessons learned from the launch of TCY, and so much more. Just a reminder, nothing said in this podcast is a solicitation to buy or sell any tokens, and that the guest or host might hold tokens discussed in any given episode. You can see a disclaimer at www.neonewstoday.com. Also, if you enjoyed this episode, please consider rating and reviewing it on your favorite podcasting platform and sharing with your friends and family. Every rating, review, like, and comment helps us reach more people to bring you more of your favorite guests. With all that said, I really enjoyed speaking with Aaluxx, and I hope you enjoy the conversation too. Hey everyone, welcome to the Smart Economy Podcast. Today we're joined by Aaluxx Myth, the co-founder of Maya Protocol, a decentralized liquidity solution that enables native L1 to L1 swapping. And he's also the author of Prop 6, which led to the creation of the TCY token. That was part of a whole THORChain debacle, which I can't wait to delve into both of those things. But first of all, how's it going today, Aaluxx?
Oh, good. I'm speaking from Bitcoin Vegas, so excuse the boring generic background, but doing pretty well. Thank you for having me.
Yeah, we were kind of shooting it back and forth before we hit record, and I actually got to meet you and your team at Rare Evo last August in Vegas. It's cool to see you back in Vegas, back in the States at a conference. You haven't necessarily gotten to spend a ton of time at the Bitcoin conference, but what's like the general vibe of the event right now?
It's good vibes. I think people have said it's huge. I'll be heading there today. That, the speaker roster yesterday was great for the industry pass. And yeah, I've heard good things. Odd about Saylor with his reserves, but I have my theory of why he doesn't post them. And yeah, it's going to be, I think, a fun week. I'm more in the, like you said, the biz dev, meeting people, working some stuff out with specific guys. Like as good a place as any to meet when you're running like a big network of pseudonymous people that are all over the place. So it's just like a conference are just as good a place as any.
Yeah. Do you find that you're trying to attend more Bitcoin oriented events or like crypto in general? Because we met at Rare Evo, which is kind of like a Cardano ecosystem event. And now you're at a Bitcoin conference. Maya Protocol is multi-chain. So do you find like value in going to more general crypto events or Bitcoin specific events, or do you kind of have to touch them all and go to all of them?
I kind of look where the DeFi scene is going, because like Rare Evo started being Cardano oriented, but ended up being bit more DeFi and cross-chain. So we attended that. Here in Bitcoin Vegas, I always wanted to come to a Bitcoin one. It's the first time. So it's fun, but I'm coming specifically to meet very specific people, but probably going to permissionless, token 49 in Singapore. Those are more general. They're still intense or like more degen oriented, because I was there in Austin for CoinDesk Consensus.
Consensus, yeah.
That's too corporate for my taste. So like there's not much we can do there. They're like, oh yeah, where's your company based at? I'm like, why are you guys talking companies in a crypto event? Yeah, I think Consensus and those more like corporate ones are not for us. Although maybe, there's someone specific to see.
Yeah, and it's a shame that you haven't had a chance to go to the Bitcoin conference yet, because yesterday I saw a question being asked on stage, and the question asker was basically saying like, we've evolved past owning your own keys. Like it doesn't really matter, not your keys, not your coins anymore. And for like a BlackRock or institution, they're starting to provide services that custody keys on behalf of users. So we're starting to get into this realm of institutionalization of people that are buying and holding crypto on behalf of like mainstream users. And you mentioned that Consensus kind of has these sort of people there. And I was wondering if like you're seeing the same thing at the Bitcoin conference, but you were doing BD all yesterday. You didn't really have a chance to go see all of that.
Yeah.
So maybe before we jump into what you're working on, you are pseudonymous. You go by Aaluxx Myth. So I didn't really have a chance to stumble on your LinkedIn or anything like that. So what were you doing before you and your team founded Maya Protocol? Were you working in blockchain and Web3, or were you a developer in another industry? What was kind of like your path before you got into blockchain and crypto?
Startups. We have been in startups. We're still in startups. One of the three co-founders manages that side of the business. We have a software agency. If you count every engineer and designer we have, we're like upwards of 70 people, out of which around 6 to 7 are in Maya. So the team in reality is a bit bigger. But that's kind of where we came from. We always wanted to get into crypto. I just don't like smart contracts. Solidity on EVM, I don't like it. Upon reading about it, it's a very adversarial environment. You have to worry about many things in a design. So THORChain fell in love with it, and it was our first dip into building in blockchain, just forking THORChain and building Maya. But yeah, it was our first time. So it took a little while to get the ropes, but it's been 4 years since. Quite a fun ride.
So is your development company working on non-Web3, non-crypto stuff as well?
Yeah.
Interesting. So what was your kind of genesis then into Bitcoin and Ethereum? Maybe you don't like smart contracts, so it wasn't Ethereum that was kind of like your aha moment. Do you remember the first time you came across crypto and like what it took for you to get to the point where you're like, I understand this, let's build here?
I was offered crypto by a friend, like, let's buy one Bitcoin, I think. I don't remember what price it was. It was pretty low. I was actually in high school. We saw the price and we didn't know it was divisible. So it was like, oh, we can't afford one. Okay, let's forget about it. We should have bought like 10%, because that we could have afforded. But yeah, we were dorks. But not much later, I did start to get into it, read a little bit. I like research, so I would go to the white papers, but I hadn't dipped anything yet. Then bought a little bit, then helped someone with their cold storage solution, got a little bit more interested. And then I had to buy back some ETH and force hold it for like 4 years. It's an interesting story. I can tell it some other time because it's funny, but it will take us a while. But we ended up pretty much holding ETH from 80 to like 1600. Forced follows are great. Don't forget, I think, you're trying to beat the market. It's very difficult. But we did pretty well on that run. So that, of course, got me more interested. And I started doing even more research, reading more white papers, and stumbled onto THORChain. I was an LP there in Ethereum. And this is when, I was listening to a webinar, and actually JP is speaking in the webinar. And the guy says, eventually there might be 3 or 4 of these things because the market's huge. There's a lot of chains, there's a lot of demand, and we can't take them all. I was like, oh, I want to be second. I think this is too important. I come from a developing country, Mexico. Everybody loves Mexico, but we all know it's not fully developed. But here in Latin America, you can have a dictator up in a NIFI, and you can have the systems choke you in a NIFI, and everybody knows the government's out to get you. So here we don't have the luxury of using crypto for, let's make money. We're here to actually free ourselves from that because it's what we've lived for the past century. So you see Venezuela, you see where Argentina was, you see where Nicaragua is, and you're like, how do we make Mexico avoid this? And the only solution is you cannot have the government control the monetary system, because actually Mexico has been relatively responsible with it. We have a very good central bankers, interestingly, and they end up making it in the World Economic Forum, which is funny to me. But we Mexicans are everywhere. But that between that and getting interested and reading the white papers and stuff, I just think THORChain is too important. So we thought to build redundancy for THORChain, and that's what we've been doing ever since.
Cool. Yeah, I've had Chad on the podcast as well as JP. So it's nice to have kind of like a third head of the THORChain ecosystem join the pod. And I remember I was using like Asgard decks way back in the day, and when THORChain was still, I think it was on BNB chain back in the day. That's when Rune was. So before even like the L1 to L1 swapping went live, like I bought into the mission, into the vision, and the scope of THORChain was just so large. It was a really hard problem to solve, and it took years and years. And so it's really cool to finally see like now we have Maya protocol. There's like SwapKit that's enabling other teams to start building on top of the THORChain solutions. Yeah, like it's really interesting to hear that you heard that THORChain can't handle all of the traffic, it can't handle all of the tokens, and you decided like, okay, let's like step up and be the team that does this. So before we delve further into Maya, you hit on a really interesting point, and that's mostly that like you think of like countries in Latin America, you think of countries in like Eastern Europe, in the Mediterranean, who have just like terrible fiat monetary policies, rampant inflation. I mean, you even said that like Argentina's good. Like it still has 46% inflation. It's not 200% inflation year over year. So like the fact that this is good for an emerging economy in Latin America, it still kind of like showcases the difference between what an American or a European holding crypto is, which is a speculative hope that number goes up, versus like somebody living in Latam or in Southeast Asia or even in like the Gulf states or wherever, where blockchain is used as a tool because a lot of people can't gain access to a bank account or the central bankers are devaluing the currency at a rapid rate. And you also mentioned that like Mexico's not in necessarily an issue right now with the currency. You have decent central bankers. So it's not like DeFi and crypto is a lifeline, like as it is for somebody in Nicaragua or Argentina. But there's still a different relationship that the region has with this technology because it enables people to participate in like an international economic manner that they might not have necessarily been able to. So on the ground, when you're meeting with like your fellow citizens in Mexico and you're talking with people who are crypto natives and maybe people who aren't crypto natives, what's just like the vibe like? Is there receptiveness to this technology? Our parents, our grandparents seeing the value of Bitcoin and blockchain networks, and are they onboarding? Do they understand like the value prop of DeFi? And what DeFi offers, is that more than the hurdles it takes to start understanding crypto? Like, what's just the general vibe like in the region? Are people buying into it? Are they adopting it? Are they using it?
Yeah. So we do have decent central bankers, like you said, but we do have a pending doom of having like expropriation and stuff like that happen. So it's a fear that people have because it's happened before many years ago. I think already over a century, but still it can happen. People will see also crypto as an exit plan. So it's not only a hedge against inflation, which in Argentina you definitely had to do. We have a few employees in Argentina, we pay them with crypto. And they were the rich kids in the block because their currency was worth the same next week. But in Mexico, it's definitely also an exit plan. If you need to move your shit and go live in Spain or whatever, or in El Salvador or Singapore or Switzerland, those are usually the suspects. You're very light on your feet with crypto. People have real estate, but everybody knows that it will take a while to offload if things go to the downturn. Gold is heavy. So it's just, if you need to go, you can take that with you. So it's, I know at least for like my family, that gives them peace. So that's definitely something even adults can understand, like grown 60-year-old people. I wouldn't say grandparents because people will think of 70s, 80s. Those are coasting. They're no longer really strategizing. But if you talk with someone in their 50s or 60s, they will understand immediately about, having a reserve that you can have appear anywhere else in the world next week if you need to move. So that's one of the key selling points in Mexico. There is a crypto market, it's growing. There is a builder market, it's growing. You have Bitso, which is a unicorn that was born and raised in Mexico and doing pretty well. It's decently managed for a central exchange. And people are still in the road to adoption, but it's still too difficult. And that's another key problem I'm trying to solve elsewhere, not with Maya, but how do we make it very stupidly simple so that my mom can use it without my help? That's kind of like my goal, looking at some solutions for that, also for e-commerce and payment gateways, and points of sale. The same solution needs to cover all of it. How do we make it very easy for the user, and how do we make it easy to spend? So that's something that requires more work. But yeah, another key feature is that you in the US are spoiled because you have access to financial instruments, everybody's banked, rates are low, you can IPO in New York very easily. You have access to a lot of things. The only thing that sucks is your legal system. It's too expensive. But beyond that, everything is great. And that's something you don't have in Mexico. In Mexico, banks won't lend you. It's difficult to get an account. Once you get it, you don't have access to a lot of things. Honestly, you cannot easily refinance property. There's no loans today by a Mexican bank for industrial warehousing. I know because I developed them. So I cannot even get leverage for that at all. And Mexico is the best off in Latin America. So the fact that a team can build and go to market and access the worldwide markets in crypto with no permission, that's also very powerful for Latin Americans. Because Latin America has always had talented people, but they end up going to work for someone in California, for someone in New York, for someone in Berlin, for someone in Switzerland. But it's very difficult to make it on your own. And it's mainly because the talent is there, you just don't have access to the market. You need to go through someone that will give you permission because capital is very highly protected by social structures. So the fact that in crypto you can go direct, that's also super powerful in Latin America. And it's something people are aware. That's another thing people in their 50s and 60s will understand. Oh, you can IPO of sorts and like go to market and have somebody in South Africa buy your coin. Yeah. Oh, that's awesome. I love that. Then they started asking me, oh, can I do that for my shoe company? And I'm like, no. That you cannot tokenize your shoe company yet. But it's something that does ring well there.
Are you starting to see cases where, like, if somebody wants to purchase an industrial warehouse or a commercial property, where they're able to leverage Bitcoin or Ethereum to take out loans in USDT or USDC in order to purchase real world commercial warehouses? Or are we still a little too far away from that?
Not the taking out loans. I've heard that I want to purchase with Bitcoin and ETH, but it's rare. It's very rare.
Interesting.
But it does start to make more noise. Every time Bitcoin is at an all-time high, my wife's uncles again say, oh, how is it doing? I heard something good about it. Also when it crashes, I heard it's done. I'm like, yeah, no, it's not done. It's a part of, it's normal. It's a market.
Yeah, that transcends borders. That happens up here too with my aunts and uncles. Okay, cool. So one last question before we dig into Maya and THORFi. Why be pseudonymous? What are the benefits and the reasons for being a pseudonymous founder? I guess maybe if I were to take a guess, you mentioned how like we're spoiled here in the States. So for me, it pays to be doxxed. It pays to have my name out there because if I want to go get a bank loan for starting a Web3 business, like it's okay. I can just have my name out there. But maybe that benefit, that value isn't there in Latin America. So also like we see a lot of the crime that's related to people being kidnapped. So it's very easily understandable why someone would want to be anonymous. But you walk the line of both being anonymous, but also kind of like being out there and being a face that people can talk with. So why be pseudonymous? What are the benefits? What are the reasons? Why did you choose to do this?
So personal security is the main one. I'm not worrying about the crypto guy that knows Maya or THORChain to see my face and come find me. Good luck to them to find me and chase me in Mexico. It's my turf. But there's bigger fish in my turf. You do have organized crime in Mexico. It's relatively safe in Guadalajara, or like almost completely safe in Guadalajara specifically. But you don't want to have a high profile anyway. I refrain to my home and work from there, and I don't wear or do flashy things, and that's enough. I'm building for a purpose and for my family's future. So I don't need to flash, and that's an important one. Second is what we're building is permissionless systems. This administration is friendly, but I don't necessarily have that as a given for US or overall world. It can change very quickly, as it changed back from being terrible with Biden to now okay with Trump. Some of us have been chased. If somebody wants to find me, they can. But having an extra step and keeping a low profile, I think is healthy. And it set the tone for my team as well, so that their faces aren't out there. So I'm a bit more responsible. I started this thing off. I'm fine with the risk I'm taking, but I don't think it's fair for them. if the leader is doxxed, then like everybody wouldn't take it seriously. So I do want them also taking it seriously for their safety. And finally, it's also just a challenge because why should it matter what my name is? If the code is there, the system is decentralized, everything's transparent and on chain, why does my name matter? And if it does, then we're doing something wrong or the market is doing something wrong. So it's just like also out of principle a little bit.
Yeah. So one of the things that I care about here, obviously, is like stablecoin legislation, market structure bill, so that we as an industry can be able to survive a Biden or a Trump, and it doesn't matter who's in office because there's law that says whether this can be here or can't be here. There were multiple times over the past couple of years where we almost moved our business offshore because of the Biden administration. How did that have an impact in your neck of the woods? You mentioned your administration's relatively friendly to the space. Does having like your neighbor to the north with the biggest military that's not afraid to go give freedom to someone who has oil under their country, does that like impact you guys in a negative way? Or is it really just kind of more noise for what you guys are doing and what you're building?
It was unnerving under Biden seeing some people be served Wells notices, some people getting charged and arrested and put in jail. I was very far removed, and we definitely are doing things either better or quieter. And I knew we're not doing anything wrong. If you see law, what we're doing is actually right. We're keeping to constitutions, we're keeping to law and order. It's just governed by code. In that sense, I felt some internal peace, but it was unnerving. Now with Trump, it does seem like, okay, we can breathe. And at least it's for probably 8 years, we can build and let build, live and let live. Feel a little bit better. I can tell my wife that it's okay and that there's not going to be any problems anytime soon. And that's, of course, also nice for her. In Mexico specifically, there's just no regulation on crypto. It's just like, oh, if you made the money, you should report it and pay taxes on it if you want to kind of bankerize it. But they don't recognize it as a currency, as an asset, as anything. It's just magic internet money that they don't understand. So I'm perfectly fine that's staying that way, to be honest. In Mexico, I don't really see an issue. And I think it's an important battle to fight. A lot of respect to Zcash, for instance, that they're doing a privacy-oriented coin based in the US and they're lobbying every week in Washington. They have a guy especially for that. That fight is a tough one. But it's one that sets a precedence for the future and that armors it against future administrations. So I find that pretty good.
Yeah. We saw in January when JP kind of froze THORFi, a instance where maybe THORChain wasn't as decentralized as we thought it was. There have been changes since that's been made to the node architecture and ways in which things can be frozen, and there needs to be some governance put into place. But it brought into the question like this grander kind of philosophical, what's the level of centralization versus decentralization? And I've been saying for years that decentralization is a spectrum. You can have token decentralization, client decentralization, programming language decentralization, geographic developer, all these different things that kind of like build into the levels of decentralization. So where would you kind of like rank Maya protocol right now? Like if you and your team walked away from the project, is the protocol at a place in its maturity where it can continue to persist even without a dedicated team working on it?
So there's already two teams building on Maya, not only Maya. So much like THORChain and Nine Realms. On that regard, that's actually pretty good. We don't have any validators at all. We don't control the network whatsoever. And we have excellent node operators. So I think it could live on. It would be a blow. It would slow things down. They would have to agree which new GitLab account to have because the GitLab, we administer it. So the code repo, but they can fork it and continue elsewhere. It would just take some time to coordinate and kind of make sense of, where the hell are these guys? We need to update this or that. So I think on that, it would be fine. So the network is decentralized. It's not decentralized enough yet, but we're young. I don't beat myself up for that. It's going to happen as we keep growing. We're still small. For a $25 million market cap, we're incredibly decentralized. The code is open source. We build in the open. Everything's public and transparent. We had a fair launch. The token is well distributed. You need liquidity units to bond. Since it's not the token itself, the current node set cannot protect the token and make sure they're the only ones that can own it. So people can buy up liquidity units and bond those. There's several things promoting decentralization. It's just that we're young and small, so there's a natural limit, but better than a multisig.
Yeah. I mean, I think we could even argue that even it's 13 years since Bitcoin first mined its first token, that there's really truly only two decentralized networks, and that's Bitcoin and Ethereum. And you can even argue the levels of decentralization for both of those. So again, that's why it's so important to think of decentralization as a spectrum, that it's not binary.
Black or white, yeah.
Exactly.
For me, decentralization only matters insofar as it promotes permissionlessness and self-custody. So it's a tool. It's not the end in itself. The end is permissionlessness. That's what we built Bitcoin for. That is a key word, as Eric Voorhees very eloquently said last year in Permissionless. Decentralization, it can be 100 people that are disaligned with the permissionless value. And then decentralization is not good. Something that we've demonstrated in my eyes that we care about permissionlessness first with a few crises that have happened over the last year. That is the true north. That is the star that we should follow. The reason we're building here is to have people be free and not require permission to access their money. That's why self-custody is important. And the markets. That's why DeFi is important. Decentralization in itself is just a very elegant way to get there. Another elegant way to get there is privacy. And the best you can have is privacy and decentralized, because then it's truly equipped to protect the freedoms of the small ones and the big ones, who matter also to create the market and to provide prosperity. The problem is there's a huge middle there that without privacy or without decentralizations or both, they start giving up freedom for security, and they start doing the ruling of the majority, the tyranny of the majority as well. So those are two things you want to avoid. Decentralization and privacy achieve that, but the end goal is permissionlessness and self-custody.
Mm-hmm. You mentioned that the project is a $25 million market cap. So are you viewing just that through the eyes of the Cow token? I always like to assume that our guests are a combination of crypto natives and my mom. So when we're describing things, sometimes I ask us to Eli 5 some principles that are very native to you and me. We understand these inherently, but then also we try to keep into perspective somebody who's never heard of Maya protocol before or is just grasping with what cryptocurrencies are. So with all that said, can you just give a brief Eli 5 of what the Cow token is and the role that it has within the Maya ecosystem?
Sure. So Cacao is the native token of Maya protocol. Maya is a chain, a sovereign chain that runs a code similar to Cosmos, but what it actually does is connect to several other chains, say Bitcoin and ETH, to facilitate cross-chain swaps. So in order to facilitate this swap, what Maya does is run vaults in Bitcoin and vaults on ETH that have funds in when they LP, and that these vaults you can send to them with some instructions in the memo that tells Maya, okay, I want this Bitcoin converted into ETH to this address. So that's what Maya does. But in the middle, for all of that to work, we have Cacao, which is an economic token, which is used for people to pair their liquidity with. So they added Bitcoin and Cacao. Somebody else added ETH and Cacao. Somebody else adds ZEC and Cacao. And what happens is in the swap, you just said, here's the Bitcoin, I want ETH, and Maya will do that for you. You don't even need to know Cacao exists. But in the background, actually two swaps are happening, Bitcoin to Cacao, Cacao to ETH. So that's pretty much the gist of it. Why we choose to do that is because if you don't have an intermediary token, the problem you start to run into is liquidity fragmentation, because now you need n factorial pools for n assets supported. Whereas with Orway, you just need n pools. So the liquidity is much more concentrated. Now you could use a different intermediary token. That's what Chainflip chose to do. They're using USDC, but now you're introducing third-party risk. So now USD is a problem. And yes, they could change it, but it's a problem. Whereas in my THORChain, we have an internal token that's kind of like a unit of account. And it's what also powers the incentives around everything else, because now you can charge fees, keep them in cacao, and provide them to the players as incentives that are doing good, not needing any inflation. By the way, Maya has had no inflation since it launched. It's all coming from swap fees. And we're fine being small and growing where we deserve to be. I'd much rather the continuous progressive building than the massive booms and busts. That's kind of the Maya way. Stability, I think, is preferred. And it's paid off because integration partners also are looking for stability. If you have Trust Wallet integrate you, they're looking for stability in their swap provider. They don't care if it's small, they just care if it's stable.
I think you just hit on a key differentiator between Maya and THORChain, and that's zero inflation, basically. Am I correct in assuming that whenever there's a swap, not only do fees go to cacao token holders, but that also triggers the creation of new cacao tokens?
No, we have 100 million cacao tokens, period. When somebody paid Bitcoin to ETH, swapped Bitcoin to ETH, they got a little bit less ETH than they should. The difference are fees. And you can extract those fees from the pools in cacao terms and put them somewhere to be paid out. And we pay it not to cacao holders, but to active users, liquidity providers, and nodes. But you don't need to inflate, like the same 100 million cacaos are still there. They just changed hands from the user who's willingly paying fees. They don't know it was in cacao. The system managed it for them. And those doing something that you want more often happening who get that cacao for their work or risk. Yeah, and since Prop 6, THORChain has also become non-inflationary. We got them into the club.
Well, we're going to delve into Prop 6 here in a minute, because I think just providing the context and the background for Maya protocol really showcased how you were the right team at the right time to provide the solution to the THORFi issues. But I'm just curious also, other than, well, now Rune is not an inflationary asset, but beforehand, it might have been. So what were some of the other differences then between Cacao and Rune? Because the way in which Cacao operates is very much in the same way Rune operates in THORChain, where you have a Bitcoin to Rune pool, a Rune to Ethereum pool, and if you want to natively swap Bitcoin to Ethereum, you trade your Bitcoin for Rune and then Rune for Ethereum. It's very similar with Maya protocol. So what were the other kind of like key nuances or the key differences between Maya and between THORChain the way it was?
Yeah. So on THORChain, you also bond Rune for validators. On Maya, you bond liquidity. So you have Bitcoin cacao and you bond that, not the pure cacao. That's a key difference. We didn't have lending or savers. We don't have inflation. We never had it. Emissions, of course, are always beating prices down. We were fairly launched early on, so the token was well distributed and in no central exchange. Rune has a big amount of its float in central exchanges, which brings other sort of problems at times. I think those are the main beats. We always cared a lot about reflexivity and avoiding it on Maya. We're in the game of creating swap volume, and swap volume requires pool depth, but it also requires partners that integrate us. They care a lot about stability. So your design shouldn't be made to leverage and go up and go back down and go back up and go back down. It should be as stable as you can design it.
Yeah, there was a calculator that I would play around with in 2022, where if you looked at all of the assets that were part of the THORChain ecosystem, then you could like play with the price and you would see the price of Rune go up, and that would drive like a hyper speculative kind of like hope and assumption for the underlying Rune asset, which it sounds really interesting. That wasn't necessarily like baked into the Cacao model, or am I incorrect?
Well, it is meant to grow and it will. It just has to make sense with the swap volume. It should follow a regular swap volume increase, not a spike. A spike doesn't matter, but it just rewards for the current guys. But if it's regularly a higher volume, the price should follow. It shouldn't be that the price happens and then hopefully we can sustain the valuation, because then it's when you get those things.
So Maya's still young. Are you able to like objectively see this thesis playing out now as you kind of add more integrators, add more partners, and you start to see volume over time increase natively? Are you starting to see the thesis that the price or the value of the Cacao token matches the volume that rises? Is that playing out now?
Yeah, so we started having volumes of $40,000 a day, then 400, now 4 million. We've had 40 million. one day. That's our spike.
When was that? When there was a massive market dump?
No, it's just a market movement. So there's a lot of liquidity moving, and THORChain cannot have it all. So there end up being some pools in THORChain get priced differently because of moving so much that all of a sudden Maya becomes very competitive even for very large swaps. So some will end up on our coin. But as we see that there is definitely an effect. Yeah, definitely we've seen it. And Cacao is very interesting because there's two things that I like, which is the speculators start to leave and the token gets a little bit compressed. And now we get close to the very fair valuation. And, the APYs are pretty good. Actually, for people in the system, everything's fine. The Cacao market cap is low, but everything's fine. And then all of a sudden, people FOMO and it's scarce. So all the speculators come in and they're like bidding each other. So we went from like 13 cents to $1.30 because of that. And not because of any tokenomic design promoting that. But the second interesting thing is we're already back down to 20, 25 cents and everything is fine. The system's okay. Whoever wanted to leave left, but the system has kept servicing swaps and increasing its volumes. And who held, who profited, and who lost. But nobody is coming here to bang the door of why is Cacao 20, 25 cents? Everybody understands. Some people bought the top. It's their problem. And I am feeling this compression now, like the pump being primed again. We'll see. It's definitely fun. But I much rather that we grow, 20% month over month, year over year, not these kind of spikes. They just create sometimes false expectations and they put kind of unnecessary pressure in the team sometimes to get back there, which is unreasonable. I like more the steady approach, but the market is the market. It's permissionless, so I cannot stop anybody from doing anything.
So the podcast is protocol agnostic, but I spend most of my day in the Neo ecosystem, which is an OG L1 from 2016. And you just get a lot of people who are mad about token price. And they come in and they're very salty and they put a lot of expectations on teams and builders. And there's a difference between a Cacao token that has a native inherent utility that's very clearly defined. It is used as a second half of liquidity pools so that you can do L1 to L1 swaps versus an L1 token that's native to a blockchain that's a little bit more speculative. Like, I would still argue that we don't have a value proposition for Ethereum right now. We can't point as to why the price of Ethereum is the price that it is. So with that, you get a lot of people who might get upset at you at the price of the token. So it's nice to hear that you're not necessarily dealing with, I call them salty people. You're not necessarily dealing with like salty bag holders.
There's a few, but
Sure.
very, very few. And, we launched the token fairly. We gave all of the supply away for free. We got zero. We earn a percentage of swap fees, tokenizing the Maya token, which you will find it starts to sound very similar to TCY. But that's the way we launched. It's also not that they can point and say, oh, you guys probably sold the top. We don't have any Cacao. Any Cacao we have, we earned. For every $9 you guys earned, we earned one. If anything, you sold the top. It's a refreshing setup where I'm not constantly anxious or worried. And that helps Maya be able to focus on how does the next 5 years look? Not like how do we get next month to have Cacao higher? I don't care about Cacao price. I care about swap fees. And that's what will power the system.
Let's transition into TCY because we only have a quarter of our time left. And I'll just do my best to describe what the situation was. And you let me know from a very high level where I got it wrong. In January of this year, it was noticed that THORFi, which is THORChain's DeFi ecosystem, there was an issue with the borrow and lend program. And there's probably a lot more nuance to this, but long story short, people were able to lend their tokens and borrow tokens, which somehow got commingled with the liquidity pools that were involved in THORChain. And so we lost the ability for people to identify the claims they had on tokens that belonged to LPs and belonged to borrowers and savers. JP, one of the founders of THORChain, essentially froze THORFi using his admin keys. Again, I'm sure there's better terms and better ways to outline this. And that was kind of like the canary in the coal mine. And that basically said, hey, there's a problem here with THORFi. And JP froze it, but then he was eventually removed from having that level of power. And then a month later, the validators, the node operators for THORChain actually opted to freeze THORFi because there was indeed an issue with this commingling of assets and borrow lend, as well as the LPs, which if it would have allowed a bank run, basically it would have tanked the price of Rune, which would have made the ability for THORChain to operate with the liquidity pools null and void. And there would have been a bank run or a chain run, I guess we call it, so strong that THORChain would have no longer been able to operate. And I'm in the camp that THORChain, Maya, Chainflip, this is probably, with the addition of smart contract development on a blockchain network and just Bitcoin in general, this is probably like the third most important contribution to blockchain and crypto in general. Like, we need to be able to permissionlessly, trustlessly trade between L1 to L1. So that's the overview as I see it for what the issue was with THORChain. And it was up to the community to provide a solution. And so Maya Protocol, with the structure of Cacao token, you guys were pretty much like the perfect solution to create Prop 6, which led to the launch of TCY, which launched earlier this month. So where did I generally get it right? Where am I getting things wrong? And maybe you can use this as a launching pad and to talk about how you came up with Prop 6 and the solution for TCY.
So the chain run would have happened with or without a pause. The writing was on the wall. The system was moving quickly into insolvency. So something needed to be done. Now, something that people sometimes don't understand is that because of how AMMs work and how liquidity works, if Rune kept going to zero, the amount of Bitcoin there to pay back savers and lenders would also go to zero. So they would say, no, let it happen and we get our Bitcoin back. No, there's not going to be any Bitcoin for you. Now, at the time of the second pause, if we had killed THORChain, let's kill THORChain. Those guys made a mistake and they don't deserve to be around anymore, which is, I think, is ridiculous. But let's think about that for a second. Well, at that time, there were $60 million of assets in the pools. And there was $100 million of outstanding savers, $100 million of outstanding lenders, and $100 million of DLP capital that got lost as well in the meltdown. So there were 20 cents on the dollar per person. And they would have gotten those 20 cents on the dollar while killing Rune, which would have destroyed $500 million of equity. So you're paying 60, killing 500, and not even being able to pay another 240 that you should. It's a terrible idea. There was a big THORChain hater camp promoting that. And I tried explaining, and it was ridiculous. They just see everything as zero sum. The thing is, THORChain is not zero sum. It's providing a valuable service. During all of this time, swaps kept working, by the way. THORFi was paused, but swaps kept getting served. $100 million in swaps, hundreds of thousands in fees every single day. So the question was, how do we take this cash flow, this amazing protocol, and this great community that cares about the mission, and do a solution? Prop 6 gets a little bit inspired in the Maya token, which is how we get paid with swap fees. It gets a little bit inspired with TCB and Pedro's proposal, their different proposals that we read, and they build on it to create kind of a restructuring plan, which is, we cannot pay you $200 million. What we can is commit to pay you 10% in perpetuity, tokenized in this TCY token. We minted 206 million because that's the 206 million that were owed. We gave them to the users affected, and now they can choose, and we created a pool. So they can choose whether they stay on or they sell it at any haircut that each individual chooses. Now, the pool will allow people to buy it as well. And why would they buy it? Because they expect THORChain's volume to go up. The bottom of the THORChain volume went down to 60 to 80 million. It's now again atop of the 100 millions, 150. So people betting that it will get back to the 500 million it was doing before. There's people buying it, and then that pushes price up. And at some point, the price is such that someone that was owed $1 says, I'm fine with 40 cents. So we had a very good launch. It launched on 5th of May of 2025. It went up to 54 cents the first day, then back down to the 25 to 30 cents. Then the recovery is still ongoing. It went up to 30 to 35 cents. Now it's in the 35 to 40 all of the time. It's only been 3 weeks, 4 weeks. So hopefully we get to $1 soon enough, which at that point, it means that every affected user got made whole according to the reference price of 23rd of January. So yeah, I think it's a fair system. The way we build the tokenomics is also such that the protocol is constantly also buying TCY. It's not only paying 10% to holders, it's also there's a few mechanisms to buy back TCY as well. So the protocol is also bidding it up and purchasing back its swap fees, which is interesting. And yeah, we wrote the proposal on the 2nd of February, 10 days after the second pause. I had just met JP. I was driving back to Mexico City, 5 hours drive. My sister was giving birth. I had the idea. I wrote it down in the hospital, published it, started rallying the troops, telling people they should go for it. There was a proposal by JP himself with like 11 votes, a proposal by Nine Realms with like 7 votes, and mine got to 12 in like an hour all of a sudden. So it was people were hungry for something along these lines. Basically, that night I was hopping onto spaces, then being with my family, then another space, then some tacos with my dad, another spaces, hold the kid for the first time. And then I went and had met with nodes, met with different people around the world. And finally, at 4 in the morning, so 10 hours after I wrote it, proposal passed with 67% consensus. It was an interesting time. But then I woke up next day to the cold reality that now I had to get it done. It's not only about proposing it. The next 3 months and 3 days were about ironing out details, simplifying where it could be simplified, improve where it could be improved, code it. It was like 90,000 to 100,000 lines of code, testing it and doing things around it. So like, what's the token logo? All of these questions of how will the claiming procedure work? How will the UI with the claiming procedure happen? Where will these be hosted? Create the documentation for other interfaces to host it as well. So all of these things. And we really wanted to do it as fast as possible because we had a lot of people counting on us. Yeah, it took us 3 months, but it went off to a great start and happy with the results so far. It's been quite the ride. And it was not only us, like me and the Maya team, there was also Nine Realms. Shout out to Orion. I'm actually here to meet him in Vegas after all of this. We practically talked daily and met 3-4 times a week during all of this. He was great. And we were ping-ponging the proposal. Oh, we should do this. No, because of that. Okay, then we should do this. Okay, let's do that. So that was essentially our job for 3 months. But it's a very interesting token from a very interesting protocol. We removed inflation as well from THORChain that was causing sell pressure, and now Rune was very leveraged. So that's one of the ways we've been shedding its leverage. So now THORChain is, I would say, as healthy as it can be and healthier than it's been the last 4 years. Very excited where it's at and getting it ready for its next stage of growth.
Yeah, and full disclosure, I'm a TCY holder. I got caught up in the fiasco. I was a lender for many years, basically since Earn was launched on THORFi. So it's kind of an honor to have you join the pod because I remember when your proposal came through, it was the first light of hope that I felt as a disgruntled token holder and an ecosystem participant. And I remember just kind of thinking like, I'll take my 20% and walk away now when they were talking about just shutting down THORChain and distributing the funds. I thank you and your team and the folks at Nine Realm, and shout out Orion. I met him at Token last year in Dubai. I forget where I met him, but maybe it was Binance Blockchain Week in Dubai. But really nice fellow. So shout out to the work that you guys did. Fantastic work. You turned something around really quickly and did a phenomenal job. And 90 to 100,000 lines of code is no joke at all. I guess as we wrap up and kind of end this interview, what is a lesson learned? Or is there anything extra good or anything that kind of worries you about the launch? Again, we're only 3 weeks into it, so we're still seeing how the fair claim works for people who were affected by the shuttering down of THORFi. But yeah, anything that we haven't talked about yet or any lessons learned from the launch of TCY?
Learned a lot. Excellent experience. It's been fun. Have a few lessons to take back to Maya. So Maya is still my darling. So we'll keep working on that. We just integrated Zcash, which is very exciting to me. On Maya protocol, Cardano is next. But learned a lot. Learned that there's a very tightly knit community around THORChain that care. And that makes me even more bullish on THORChain and Maya because If so many people care this much about the mission, it's because it's worth doing. Yeah, many lessons learned in crisis management as well, and stakeholder agreement, and put a lot of things in practice that I've learned over the years as well. But yeah, it's a great experience. Still, my heart goes out to affected users. Some did exit at 25, 30 cents. It's still better than they would have gotten in a Chapter 7 type bankruptcy, but still, it sucks. I wasn't involved in creating THORFi. I didn't run any THORChain node back then. I even openly criticized a few things about savers and lending, but still, I don't think we apologize enough. It still sucks. Sorry to you and sorry to the listeners, but we're doing the best we can to give back as much as possible beyond $1, because that's what you deserve. But if someone needs the money right away, you have an option. And the option is actually a good one. If you compare with Celsius, FTX, these are years and years, lots and lots of legal fees, a lot of uncertainty, and you end up getting even less. So I think this is as good an outcome as any. It was made with care, and I hope it survives the ages.
Look, at the end of the day, if you want to survive in this place long term, you have to take personal accountability. So I never blamed anyone other than myself for not doing as much research as I should have into borrow and lend. And it was really amazing to see in a public and open process, the deliberation process for a solution. So again, just like shout out to you and everyone who participated in that, from anyone who commented to anyone who submitted a proposal. It was dark times, but for what it's worth, and again, not financial advice, but I'm still holding my TCY and I'm locking it up and not looking back. I think on behalf of people who were affected, like, thank you for the apology, but there's a free market, open code solution out there that anybody can read and participate in. And at the end of the day, like, we're adults, we're playing in a cutting edge industry where nothing is guaranteed. And we should be assuming that everything we put into cryptocurrency and blockchain could go to zero. So welcome to the party. You know, buy the ticket, take the ride.
Yeah.
With all that said, thank you so much, Aaluxx, for joining the pod today. Like I said, it was an honor to be able to chat with the person who drafted Prop 6. Congrats on the launch of TCY and the successful launch, and at least in the past 3 weeks that I've seen. If anybody wants to learn more about you or Maya Protocol, where can I send them?
Aaluxx Myth in Twitter and X, or you can go to mayaprotocol.com and you'll see all of the socials there and follow what we're doing.
And shout out to the Maya Protocol intern on X, keeping the crypto Twitter feed fresh and fun to follow.
Yeah, they've had a blast. It's so funny. They've been doing a good job.
Cool. Well, thank you for the time today, Aaluxx.
Thank you, Dylan.
Have a good time doing BD and enjoy the Bitcoin conference.
Thank you, sir. Have a nice one.
Cheers.
Bye-bye.
Thank you so much for tuning in to the Smart Economy podcast. To stay in the loop with all our latest episodes and insights, head over to www.smarteconomypodcast.com. And don't forget to subscribe to our YouTube channel for all of our video content. If you enjoyed today's discussion, please consider showing your support by liking, commenting, and reviewing this episode on your favorite podcasting platform. Your feedback helps us reach more listeners and bring even better content your way. We'd also love to hear from you, so please drop a comment on Spotify or YouTube to share what topics you'd like us to cover or who you'd like to see as our next guest. And if you or someone you know would make a great guest, please reach out. We're always looking for fresh voices and new perspectives. For our NEO token holders out there, please consider voting for NEO News Today as your council representative. We've proudly been serving the NEO ecosystem since 2017, and we'll continue to do so by putting portions of our council rewards directly back into ecosystem growth initiatives. So, once again, thank you so much for listening to the Smart Economy podcast, and we look forward to catching up with you next time.